Hello, 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 and welcome to everyone joining our live event today. So, my name is Michaela, and I am the campus manager here in Talent Garden, Dublin. And I am super lucky to be on site today in one of our beautiful workshop rooms. Today, I'm going to be your host and our moderator for our panel discussion. So, we're here today for a really special iteration of our Taggers Explore event format. We are here to talk about fluid funding cycles, the changing landscape of VCs, and to get some tips and tricks from our panelists on raising investment. So to kick us off, I'll run through today's agenda. We're going to begin talking about our changing landscapes of venture capitalism and the impact that has on early stage startups. Then we're going to pick Julie and Davide's mind a little bit on how to reach out, what to expect when engaging in a relationship with the VC, and once you have that relationship, how to build on it and move it forward. The panel discussion today is probably going to be 45 minutes, leaving us a bit of time at the end for a Q&A. So if you have any burning questions, if you'd like anything to be elaborated on further, pop it into the comments or chat function, wherever you're watching from, and we'll try our best to get through all the questions at the end. So today we're joined by two fantastic speakers. We have Julie Kynes, Vice President of Dawn Capital. Hi, Julie. Thank you so much for joining us.
Nice to see you.
Thank you so much for coming along. And of course, we have Davide Dattoli, our CEO and co-founder here in Talent Garden. Probably needs no introduction to anyone joining us today. Thank you so much for joining, Davide.
Thanks a lot, Michaela, and very nice to meet you, Julie.
Nice to see you too.
Great. So to kick us off, Julie, we might start with an easy question. How did you get into the world of investment and what attracted you to this type of career?
Yeah, sure. So I started in sort of investing roles, tech investing roles, sort of about 6 years ago now. Really wasn't initially the career I was thinking I'm going to take. In fact, I went a very different route down, but sort of through other jobs, started working a lot with founders and sort of executives at tech businesses, and then also sort of engaged on the other side with a lot of investors and angels and so on. And so started building my network out and really got more and more interested and sucked into that tech ecosystem. And so then one thing led to another, and then I found myself sort of landing a job as sort of an analyst in a very early stage investment firm. And then from there, sort of, everything has its history. That was Founders Factory back then joined Salesforce Ventures, the strategic investment arm of Salesforce, investing in B2B technology businesses from Series A to pre-IPO. And now I'm a VP at Dawn Capital, which is also very much a VC focused on B2B software here in London. What attracted me to the career in the end is really sort of what makes it so special. I think it's one of the best jobs in the world that you can have. You get to meet incredibly passionate, exciting people on a daily basis and get to work with them and really get them to support them on their journey, on their mission. These people take incredible risk. There's some of the smartest around the table always, and so it's a continuous learning and super exciting. You see the latest stuff that is happening in tech. So yeah, from that perspective, I'm incredibly grateful to have landed in this role at some point.
Wow, that sounds fantastic, and it sounds like you're going to have a lot of insights to share with us from all your various different roles inside the investment world. Yeah. And Davide, similarly, if you could set the scene for us a little bit, what type of funding activities have you done on behalf of Talent Garden? And I know also that you're involved with Digital Magics, the Italian incubator. What motivated you to get involved with early stage tech like that?
So thanks a lot. Yes, I was starting the company many years ago now. So I was doing it, making more than 6 different fundraising process from the early stage seed investment to our Series B last year's and a bridge this year. So I was passing through all this process, raising around 60 million euros in all the different rounds. And I'm also active as angel investors and participating to the board of director of the Italian biggest incubator for early stage startups. And I really have seen during the last 10 years somehow how different the European ecosystem is becoming, which is the evolution of what does it mean raising capital. I remember the first fundraising of Talent Garden that was 30,000 euros. That seems me so much that we can build the biggest company in the world, but I discovered only a few days later that with 30,000 euros in a co-working business, it's very difficult to build something. So I really passed all the different stages arriving to up to today. What does it mean negotiating and all the difficulties of creating a bigger company.
Amazing. And Davide, I'm sure we'll talk later on about your recent raise in 2021 and lots of tips and advice that you can give to founders who were in your position a couple of years ago. So, Julie, we're here today to talk a little bit about fluid funding cycles and how the investment market has evolved over time. So I'm wondering, from your perspective, if you can give us some insights into the market trends you've seen in the last maybe 12 to 14 months.
Yeah, sure. I think it's been a crazy year in terms of tech investing and VCs and founders as well, right? So, looking back, March last year, everyone was painting doomsday. Everyone was like basically struggling and trying to reduce burn as much as possible, as quickly as possible, really sort of preparing for the darkest winter, and possibly funding drying up, no liquidity in the market, all of these things, right? And then interestingly, and I think that goes back to the strength of actually, the tech ecosystem as it is, we've seen quite the opposite happening actually. Sort of, everything that was driving an online economy, may it be e-commerce technology, helping businesses become digital, really saw a massive uptick and sort of as the whole economy moved online, right? And that then resulted in just an incredible inflow of capital into solutions that support that journey. And as a result, we've seen funding cycles being more competitive, shorter, more capital, and valuation skyrocketing, especially for exactly those businesses that could capitalize on that journey and basically tap into those markets that have become super prominent now. So, if I look back how rounds happened sort of 12 months ago and how they happen now, it's day and night. Just the speed and as I said, the price expectations and everything has changed. I think what excites me about that is obviously the founder perspective, right? It's been it's the access to capital is unprecedented, and sort of the power of the equation is with the founders at this point because there's so much capital available. So I think, yeah, that's sort of very short summary of what happened over the last month.
That's super interesting. So you're saying higher deal volume, more money in the market, and really people leaning into the digital trends. Yeah. Davide, I'd love to throw this question to you shortly, but Julie, just on the topic of the founders, when you see changes in the market, are you also seeing that reflected in the type of people starting companies? Are their backgrounds and the reason they're starting these companies, finding these pain points changing? Or is it similar to what you've seen in the past?
So I think the profile of who's going to be successful hasn't really changed necessarily. You still need to be an incredibly great executor. Having a vision is a great start, but you also need to make that work, right? There was a million. Let's give
execution.
And there's a million digital event businesses starting off, right, at the same time. And the one that broke out massively in the market is actually Hopin. Now, that has to do sometimes with timing, with technology superiority, with different factors that come together. But in this case, a lot of it was also really excellent execution on something that suddenly became super relevant, right? And they were very in position to see that time very quickly. And we've never seen a faster growing business in Europe before. And I attest that to the CEO actually doing that and executing that. So I think that's the one case. I think what we do see is but that's overall a trend of time, is luckily we see a little bit more, sort of diversity coming up, founders from different background and investors caring about that. I think we still need to get better here, but people start having the conversation at least.
And Davide, from your perspective as a founder, when the markets are changing in the way Julie has just described, do you see new opportunities for early stage startups that maybe weren't available a couple of years ago?
Absolutely. I think that Julie talk about something very important. I think last year in particular, at the beginning of these COVID phases, we were all very scared about the fact that a big economical crisis were coming and the cash burning has to be reduced and there is no more money on the market. Instead, what happened is that somehow at the moment there is so much liquidity that it's super easy to make fundraising at the moment. The valuation really are growing a lot. The only point that I want to face it is that my feeling is that will be not something that will be for a long time. So this is also happening because the national bank and European banks are putting a lot of money in the system to really support the economy during the pandemic. But we also have to remember ourselves that probably in the second part of the year, beginning of next year, this big public funding support will end it. And so I think that making fundraising in the next month will be really key to have the liquidity that in case of big crisis you can resist is something that all founders has to focus on. And on this, in particular for early stage, I think it's important to start raising a little bit more than needed. But it's something that in a normal period is totally the wrong attitude. But in this particular period, the guaranteed 2 years of run rate and try to be a little bit more careful about also the expenditure side. So avoiding to have focus only on the growth, but try to balance is something that in the next month will become a priority, because it's probable that somehow the market condition will change very fast. So start raising now, try to take the best out of it, start making successful business, not focus only on the idea of let's spend it as much as possible, but let's try to really make something valuable long term, because the market can change.
Amazing. And guys, when economies reduce the way they have and unemployment goes up, we normally see a big burst in creativity and entrepreneurship. After the economic crash in 2008, we had some of the household name companies starting now: Uber, WhatsApp, Instagram. So if you were to take maybe a little step back and look into the future, do you think we're going to have a renaissance in the next 10 years, the roaring 20s as people are describing them of? And if so, what do you think the growth markets are going to be?
Davide, do you want to go first?
Absolutely. So I think that I'm absolutely agree with you. I'm really a person who believes that when there is crisis, starts opportunity. I think that Europe will be impacted by one of the biggest challenges in the future, because somehow, if we're talking about the technology that we are using at the moment, 80%, 90% of it are still coming from US. The change is happening very, very quickly. Probably in the next 5 to 10 years, the Chinese technology will become around 20, 30, 50% of our technology that we will use it. And the big challenge of Europe is still try to define and create successful companies across the world, starting from Europe. I think that based on the geopolitical also risk that China and US will start going in a Cold War with creating a lot of friction. We are already seeing this on 5G networks, which will become in all the different industries. And so it's an occasion for European founders to really start building great companies. And also all the economical impact of changing industries. We have to remember that Europe is also about big industries, big manufacturing companies, traditional companies that needs to evolve themselves very quickly. Or if they are not able to evolve, somehow the risk is that they will be destroyed and new companies are coming. So I believe that Europe will be one of the most interesting geographical area where to make business in the next 10 to 15 years, for the opportunity that both the geopolitical war and the changes that in the market has to happen based on unemployment and so on has to come. So yes, is Europe the best place to make business? we know that is difficult compared to other geographical area, or at least I don't see as difficult, but I can say it's different. So let's not only read the amazing US magazine and blogs or podcasts about how to run startups, because Europe is different.
Yeah, that's a super interesting perspective.
Yeah, just maybe to adding to that point, I think we've, at Dawn, we've been backing European founded businesses from the very start over the last 10 years. And I think, we've been always super excited about the talent that you have here, the caliber. And obviously we want those businesses to go, potentially global and build really, really big businesses and companies. Equally though, we've seen successes that are sort of more European bound, especially in sort of regulated industry, fintech, for instance. It makes sense also to build like a regional winner in the market, right? And hire talent here, retain talent here. So I think I agree with that. I think Europe doesn't have to be shy, and there's so much exciting stuff to happen here, and it's just accelerating. So we also just raised another fund. It's a 400 million fund, again purely dedicated to back European-based founders that want to go and build their businesses. So totally agree with that.
That's super interesting. So the both of you agree that maybe the biggest opportunity in the next coming years may not be in an industry, but maybe in Europe as a location. I love to hear it. Very, very appropriate for Talent Garden, Davide. It's a good insight. So guys, we've spoken a little bit about the changing landscape for VCs. And now I'd like us to talk on how you create those relationships. So Julie, I imagine in your career, you've probably seen hundreds, if not thousands, of investor decks and executive summaries and spoken to countless startups. Can you tell us maybe is there something that a startup does or a potential portfolio company does that sets them apart, makes them different, really catches your attention?
Yeah, sure. So I think in terms of DAX and how far it goes, obviously you need to always, I think the most important thing is to keep in mind that you have so short attention span of someone at this point, right? Someone that gets 20 DAX on the desk every single day. You need to basically bring that aha moment of what is exciting about the business, your status, why should I look at this, quite early on, right? Instead of hiding it in millions of slides. And I think the second one is it's really about telling a story at that point. It's very emotional. So it's not about a deck usually isn't necessarily only about those are the hard facts that we have to deliver, but it's also about crafting an equity story around it. And people who do that really well and pick you up and make you want to find out more, those are the ones that typically succeed. And that doesn't have to be always a business that at that point in time, when you just receive the deck, has maybe the best metrics, because if you can't communicate them or can't really show me why this is, then I won't even go as far to discover that, right? Unfortunately. Okay. So I think that's it. And then I think secondly, also understanding the audience that you're sending to sometimes. So I think sort of the worst that can happen actually, and I'm not taking that it happens, but do your research, right? Whom are you talking to? What are we interested in? We're quite vocal about that in terms of what type of businesses do we back, what stage, and what are we looking at. And sometimes I feel you're just one on the long list of people that are being emailed with the same message, and it's just not gonna grab my mind then if I know that that's the case, right? Because it's about relationship building, as you said, and not about being a number.
And Davide, when you were going for those initial rounds, that early stage investment for Talent Garden, what was, to kind of resonate with what Julie said, what was the deck size? Did you send over a 50-page investor summary? Did you try and keep it nice and short and specific and narrative and telling that story?
So first of all, I was making my first fundraising in 2011. And trust me, I was coming from a totally different sector. So somehow I was knowing zero about how to raise money. I remember I was 21, and then the first time that I was trying to raise something, I was with a person that was my co-founder at that moment, and we were together, and it was amazing by the fact that someone can give us money to work on our project. So I was really, really at level 0, and I somehow learned everything about does it mean make fundraising only during the next years. The first case history was really a deck of like 10 slides on the idea of, okay, let's try to open this idea and try to launch it. And we need some money because we don't have it, and we want to create something. So we were really at level 0. Starting now, I will totally make a different approach. So first of all, I think Julie really represent well is let's understand what you need. One of the biggest mistakes is thinking that every investor is the same. It's totally wrong approach. It's not about money, it's money. It's about what you really need to grow your idea, to grow your company. And based on that, please make your own research, make a study, try to understand which type of investors you need, and based on that starts who are the investors and which are their needs. Because probably Julie invests some type of companies also inside down capital. She's not focusing on all the industry. Probably she is more willing to invest in some industry. So if you talk to her about the wrong industry or the wrong stages or the wrong geography, potentially she's less interested. So try to really go deeper and understand who you want, and based on who you want, let's try to attack, I can say, as much as possible, because you can convince her or him way easier if you really have, okay, I'm doing this, I've seen your story as an investor, I believe that you are the best one who can help me to reach this goal. Seems something I can say basic, but for all the startups that I've seen also in Talent Garden and in my small history of angel investors, somehow it's the opposite. I need money, please. Can someone give
from anywhere?
From anywhere, from anyhow. So it's really about define who you want, because your investors is somehow also your co-founder in a different way, giving different supports. But it's like getting married. You cannot having someone to have someone. You need to have the right one.
Yeah, no, that's a really, really important point. I think oftentimes people forget that the due diligence should go both ways. You know, you're entering into that relationship with the VC, and it's much more about than just the money. Judy, I was wondering if you could talk us through, I know you said with early stage companies, it's maybe not so much about metrics, and it's more about the narrative and the storytelling and getting to the crux of the problem that they're solving. But when you go a little bit further down the track, and maybe you're looking for a follow-on investment, something like that, in your industry, B2B SaaS, what are the really important metrics? If there are founders in the audience who are looking to raise that investment in that industry, what facts, what metrics do they really need to have perfect?
Yeah, sure, happy to. So yeah, I think where those metrics matter is sort of starts maybe a late Series A, they're quite early still, and then Series B, and then later definitely a lot. So I think one of my favorite metrics is retention. I think in B2B SaaS specifically, this is super important. It's important in every market, but especially if you look at B2B, it tells you a lot about the dynamics of the business. And there's two different distinctions, and I think that's somewhat a little bit of a rookie mistake sometimes that you see. So there's gross churn and then net churn. A lot of people would only give you net churn, which means just basically includes your upsell, right? And sort of the goal is then to get above 100%. So basically, gain more through upsell than you lost potentially through churn. And then that gives you sort of a positive growth rate. That's totally correct, and that's fine. But I think if you only look at net churn, for instance, then you miss sort of potentially a leaking bucket that is quite expensive. So, gross churn is equally important, because every time you lose a customer, you need to refill that bucket, and actually landing new customers versus upselling existing ones that you haven't lost is so much more expensive. So you kind of find yourself in sort of a spinning wheel of constantly having to refill that. And so we spend quite a lot of time understanding the dynamics, why customers might be churning, why not, and how doesn't this look like. And I think obviously, recurring revenue and growth thereof is really important. We are a B2B software business, so we want to see a recurring nature versus only professional services business. So that's really important. And then I think, especially as you get later stage and in B2B and looking to public markets potentially, sort of a gross margin profile that is really high and really solid is also important. And again, it will matter, especially if you go into later stage rounds and as people think about sort of an exit scenario, because we've seen, it's been proven in the past that good gross margins, obviously, it's a very healthy business. You have more profitability in the business, but also it just links perfectly into sort of what your later on multiples will be like and what people care about. So investors also will early on care about you explaining the story of your gross margins and how they might expand over time. So I think those are the sort of the very classic, and then you can go nitty gritty into stuff like sales execution and sales enablement metrics. So stuff like people really talk about magic ratios, CAC ratios, and stuff like that, but that's a bit more granular. I'm happy to talk about that as well if it's interesting. But yeah.
Oh, sounds super interesting. And Davide, maybe you can touch on, from the founder's perspective, again, what were you, like if you could give advice back to yourself in the first couple of years, what are the things that you should really focus in on? And maybe what are some of the mistakes or the things that you prioritize that weren't that important at the end of the day?
So I think that the main mistakes that founder does is that they're very clear all the roadmap. So they want to create a unicorn, they want to create a $1 billion business. Okay, but the point is really try to distribute this into different periods. Okay, so let's try to really create for each stage of the company. Really understand which are the biggest challenge that they want to demonstrate. You cannot invest in everything. You cannot really try to demonstrate all the different things in the same moment. The challenge is, okay, I give myself 12 months. In the next 12 months, as a company, we want to demonstrate the product market fit. So based on this, we want to have these investors that is very good in supporting us in this and is willing to take the risk of product market fit. And the main challenge is finding the 5 key people that work with us to define this part. I think one of the big mistakes that a startup founder does is try to put together product market fit, putting a marketing budget since day one, hiring people in all the different departments. You cannot win all the battles. You have to choose the battles that you want to win. Split all the big path that you want to create into steps. And focus each funding round in really which are the challenges that you want to win with that fundraising, because this will also create a really good history with fundraising and with investors. Somehow you are taking a challenge, you are succeeding in that challenge, and somehow also for them is way easier to invest long-term, bigger amount of money, and more trust. Somehow is the things that you are creating, because again, is a relationship. Is nothing bad, is nothing else than creating a relationship that create values. And so focusing on splitting into stages, really understanding which it is, I think is the main real suggestion that I will give to myself watching back of all these years.
You're touching on some really important pieces of information there. I think back to when I tried to raise some funding for my own startup and having 3 years of financial projections done with no revenue and no customers and the answers to everything. And it's an easy trap to fall into, thinking you have to have the answer for everything and all your answers have to be correct. And I think that's, Julie, something I'd love to understand more from you. When you've maybe made the investment and you have that relationship, what type of relationship is the best for you with your portfolio companies? Do you want to be the person they call when something blows up and everything is on fire? Do you only want the good news? Is it weekly updates? Are you quite involved? How does that play out for you?
Yeah, so first of all, I think I would say here at Dawn, we see ourselves as a mix of employees of the founders and sort of, the one exactly that you call at night to cry yourself out and be that friend and helping hand and advisor, hopefully, with a lot of, input there. And I think how that works is going from sort of basic to great in terms of board member and also support for your portfolio founders is sort of at the base level, you're kind of joining the board meetings and you maybe ask a few questions, you maybe read the board meeting back. Then going from that to good is basically that you're kind of have this constant interchange with the founder. They might call you and they give you an update. You're maybe on WhatsApp, which I do with all the founders as well. It's basically sort of have a constant direct line of communication versus just every quarter we see each other in a meeting, right? Sort of have a constant stream. And then I think great looks like that you're not just one of the people that gets a call, but actually you're the first one that gets the call. And you're that first sort of trusted resource for the founder, both in, as you said rightly, good and bad. Because let me tell you one thing, every time, and it's building a business is freaking hard and it doesn't get easier, unfortunately. It's you always would think that, oh, this business has like 20 million in revenue and it's growing really fast, it must be splendid. It's never. There's always something burning in the back that is going horribly wrong. And so I think that's our job here, to be the one that is there when a crying shoulder is needed, essentially, but also be the one that is here to support with insight, support with help, support with connection, support with critical review as well, how an outside view sometimes in a way. And just be there in all those different roles and shapes and forms. Yeah.
And Davide, is that something that resonates with you?
If I can underline, I think the fact that somehow when you're at the beginning, you feel that it's difficult, but will become easier. The real point is that when it became bigger, it became way more difficult than when it was when it's smaller. So difficulties are never ending.
Unfortunately.
I'm sure you're inspiring a lot of early stage entrepreneurs with that insight. Guys, we touched on the topic of kind of trust and due diligence earlier as a two-way level of communication. How, from both of your perspectives, do you create that trustful relationship where you get to the level that you can call your investor and say something is wrong? Because let's be honest, if someone does invest in your company, you don't want to have to make that call. So how do both of you work on either ends to maintain that trust?
Yeah.
I can.
Go ahead. Go first. No, you go.
So if I can, I think that the point as all the relationship is not that you can call investors only when you need money. Unfortunately, I can say, but you have to create a long-term relationship, really involving them on a weekly or monthly basis, in particular in the key phase of the growth, right? Really try to understand and build with them the company, which are the challenges, also because they are an incredible source of value. They've already seen many cases like you, and somehow when you're building, you feel that you are building something that no one in history has never built. But in the reality, unfortunately, there are many entrepreneurs in the same way that has built and done the same mistakes. So I think creating a relationship, I normally do every week or every 2 weeks maximum, a point of maybe half an hour or 1 hour, but like try to showing which are the results we have achieved, which are the goals that we give each other for the next 2 weeks. And like try to create this momentum in which for all our history, we try to update each of us. I think is a fundamental element to create a long-term relationship, because in that way, it's not that you have to make the call in which, hey guys, things are not going well, but somehow it's something that you are building together, the solution. Again, depends which type of investor you are setting, because not all the investors like to be called every 2 weeks to have an update. There are plenty of investors that say, okay, I put this check. If you need on something, please call me, but once in a quarter, because otherwise it's not our job to support you. Other type of investors, really more supportive, really want to be way more hands-on. Again, you need to choose the investors that you want.
Yeah, I think that's a great point, actually. And it goes back to what I actually would have said is sort of, I think, radical transparency and, doing your work and research before you go into the relationship is super important. It's, as you said, it's like a marriage, right? And sometimes even longer than the average wedding marriage will last, right? So I think it starts in the process of when you meet each other for the first time and go through the diligence, being radically honest to each other. Both sides is super important here. And I think we're done. If you would ask our founders, that's one thing they would say about us is being down to earth, but radically honest and transparent about everything. And we expect that from our founders as well. I don't want to go into a funding relationship and then at the first board meeting find out, oh shit, actually, this is all not what we said as we're told. Obviously, as I said, things go always a bit like wrong, and you try to sell in that process, and everything is a bit more shiny usually. But I think transparency up front and those are the areas that we need to work on, that we would like to work on with you together. I think that sets the right tone. And then it goes back again, as Davide said, in terms of doing your homework and doing your research. What is the style of this investor? What we typically do is, and great founders ask us for it is sort of reference calls with our portfolio founders, so they can actually ask a couple of questions, sort of how did you interact, how does this work, who are they, what are those people behind the brand, right? And we will do the same with the founder, by the way. We'll also ask them for some references to just feel each other out and see if it's actually a fit on both sides.
Yeah, I think to underline one point that Julie was saying that I think is super important is also the radical transparency on the investor side, because I think that is important also for an entrepreneur to really know which are the stages of investors, which is his own portfolio, how the overall portfolio is going, which is the fund stages. Are they at the beginning? It's all about cash investing, or they have to make fundraising? Because if they are in fundraising, normally they have 50% of their time to support you in the daily operation, because they have to make fundraising themselves. So I think really understand your investors, not only the company that they invest into, it's something super key. Because otherwise the risk is that you are asking for something that the investor cannot do it. Maybe they are at the end stage of the fund and you ask for a follow-up round because you're not going well, no option that they could make it. So let's really try to go on radical transparency on both sides, because that is the only way to create a long-term relationship.
And Davide, you have a pretty strong track record of raising investment, especially in Talent Garden, and the recent bridging raise in 2021 in super challenging economic times. So questions I've gotten a couple of times on campus is, how did you do it?
I think, again, it's really understand what you need and why you need. So we have raised around 10 million this year, end of last year. And somehow we were focusing ourselves a lot on, okay, let's try to understand which is the company situation, what exactly we need, and which is the business potential that we're seeing. Like what was our cases is that we were seeing the potential with all the pandemia, that many people doesn't want to stay only in the city center approach as Talent Garden is based, but also in the idea of going outside the city centers in location more near the sea, where they can make remote working. And we have a product test that we want to test it. And we are coming, and the company originally starts from Italy. So we have some campus there and so on. So we say, okay, probably we have two main goals. The first one is let's try to secure the company overall. And secondly, let's try to make it a new potential product that is opening Talent Garden campus, not only in city centers, but also in small cities near the sea, where the quality of life is very high, and where all our members that want to go remote working, they can go for the summer, they can go for some month working from there. And so we decided to take an investors that was both a family office and a venture capital that were co-investing together on this specific project with this specific goal to bring the company reaching these two goals and make this new challenge in the company life. And that was permitting us to raise around 10 million from the Italian national venture capital firm, that is a governmental arm that is supporting projects in particular in this geographical area. So they were focused on making this impact in these areas, while the family offices were more focusing on supporting the company overall. So let's really try to understand your need, and based on that, find the best investors, because potentially a venture capital that want to make a 3x, if you is not your main focus at the moment, does not make any sense to raise today.
And Davide, Did you notice any difference in the mindset or the values from the VCs raising during the pandemic in comparison to previous years? I know, again, you said it was raising for a very specific reason, but were the conversations different for you?
I think at the moment, as we were saying before, investors really need to deploy capital. So most of them raised. So somehow there is an incredible amount of new investors that are coming to the market, new type of investors, like also traditional investors that are coming to the startup ecosystem. And so somehow everyone is really attached to this ecosystem. The real point and the real challenge, I think, is everyone wants to give you money, but the risk is that it's not the money that you need. So they are trying to bring you on the wrong direction. And before a potential economical crisis like we are, the risk of entering in that loop is very high, because maybe today you have a lot of capital, but maybe it's not the same tomorrow. We don't know. Maybe we will have more capital. But somehow, I think that all the investors with the pandemic really understood that there is a high potential in digital and technologies. By already knowing, but somehow also the traditional one outside venture capital were coming to venture capital world. There is a lot of liquidity in the market, but still the level of maturity of investors, the one that just started, is very low. And so the risk is that we are only giving you money to give you money, but the risk is that you're bringing you on the wrong direction.
Judy, is what Davide is saying resonating?
Yeah, I think so. I think it's an interesting market. I do think, and speaking to founders and so on, I think they have like a very clear two sides of the market right now, right? You have this part of the market where there's a lot of money flowing in. It's certain sectors, certain type of profiles of businesses, where there's a lot of hype around it, and there is no shortage of capital. It's if anything, it's too much and prices are skyrocketing. But I think then there's still this long tail of businesses that maybe find themselves not in the perfect sector, or just not in the perfect sweet spot, or not with the right introductions, and it's still sometimes incredibly hard to fundraise, right? And especially if you're in this environment that is quite like a Shark Tank, actually. So I think it's I feel like I've seen both sides of the coin at this point, right? It's just a very overheated market, and it goes into both directions of it.
Great, thank you so much. So guys, we have a couple of more minutes before I jump into the comments. So a question the community has asked a couple of times, and I know Davide was speaking about it on a podcast recently, is like, do you see IPOing as the end goal for Talent Garden? And maybe Judy, you can speak to companies. Do you see a lot of companies looking for high value IPOs, or after the kind of impacts of the Deliveroo and the WeWork incidents, are people shying away from that as a kind of exit strategy?
My feeling, if I can start, is that for an entrepreneur, IPO is the best way to create a long-term strategy for his own company. When you're raising money, in particular from VC, you immediately know that somehow one day, sooner as possible, you have to exit into something, because they have to make a cash out from your company. And based on that, there are plenty of potential exits that you can do. But my feeling and our goal as Talent Garden is really going public, because we feel that is the best way to create a long, successful path for the Talent Garden growth. So yes, we are focusing on that. We want to arrive to the market big enough to really make something successful. We really want to avoid the stagnation market for smaller companies that are going public in small markets. So that's why we decided to not going soon, but try to go on a 3 to 5 years where we can really try to go bigger. Also, if most of the time is not you can decide when to go public, but it's also your investors that need to cash out, as we said before, but also the market condition. Like at the moment, market conditions are super great to make IPOs. I think that it's true that some companies were not successful, and I think in particular food tech companies were one of the sector where we were all more somehow impacted, but on the opposite, SPAC are exploding in US in particular. So there are plenty of options to go public at the moment. The real suggestion for everyone is don't focus too much on the exit. Let's focus on make a great product, a great matrix, because if you have a great product and great matrix, sooner or later you will have an amazing exit.
Yeah, I think it's an interesting environment, and I'm always like almost deciding on a daily basis where I stand. We've seen sort of, last year a couple of incredible IPO stories, right? Companies raised a lot of money, pricing way above their range originally, and just returning us a lot of capital to investors, obviously, and that was very exciting to see. I think we've seen there was a long tail of businesses that were meant to go public a long time ago, and suddenly all of them done it, and a lot of them successfully actually. Then obviously, as you said, rightly, SPACs were the new thing over the last couple of months as well. I think the reason mainly being that a lot of companies needed to exit, but IPO has proven to be, they're very expensive, very lengthy. Pricing is often going wrong in those IPOs as well. So it's like it's associated with a bit of risk as well, and you're kind of putting yourself out there, right? I do think when I speak to founders now, there's a little bit of a reorientation again, maybe. Some founders saying they actually rather prefer a traditional IPO versus a SPAC, just given that a lot of companies that we've seen choosing that option were more different types of industries and your classic B2B software. And it also carries a lot of brand association to do an IPO. It's, as David said, sort of in terms of long-term thinking about the business, it sets you up in a different direction in a way. So I think that's quite interesting. And I know that some of our founders or founders of my network and so on are, going through all those thinkings, and it's a lot of weighing, and also timing in the market is quite insecure right now. Will this go on? I don't know. Today was a really bad day actually for tech stocks. Massively bad day. So hard to say how the next couple of months will unfold, to be honest. And I think it's stuff.
No, I mean, you're taking, there's an unknown factor to IPOing, even when all the conditions are right. You never quite know how it's going to go on the day. So I want to let everyone on the call know that if you have any questions or comments, you can send them into the chat function wherever you guys are watching from. Oh, I have one right here in front of me. Okay. What markets are Dawn Capital most excited about? And are most early stage VCs usually interested in exits before IPOs? It's on the screen.
Okay. So Dawn, as I said, purely B2B software focused, so no consumer businesses. And then we have sort of 4 verticals that we love and we've been investing in for 10 years now, and have built a lot of network effect around. One of them is sort of data and infrastructure more broadly. So data, anything from the very early sort of stages of the data value chain all the way through. And actually, back a couple of businesses, also Cluden was one that we recently announced, for instance, in that space. Secondly, fintech has been always very strong for us. Been backers of iZettle, companies like Tink as well, and continuing to deploy more there. Security, we've been an early backer of Memcast, which was a big success here. And then lastly, sort of as pillar, over more digital transformation in the organization. Companies like Honor, for instance, are really interesting here for us, a business from Barcelona. And then Series A, Series B is typically where we come in. And I think the last part, in terms of early stage VCs, I think a traditional VC, once making an investment, really will buy into the story of this will be a huge business and $1 billion business, and can I build that conviction? So I think, sort of the top tier early stage VCs will still think, is this potentially an IPO scenario? Now there be also, obviously an M&A outcome can be a great outcome for especially an early stage investor as well. So I don't think that's necessarily something that is discounted. But it's more, I think, from the mindset, how is this a $1 billion opportunity, and how can we make this an IPO is the initial question that an investor will ask themselves, knowingly that only a small fraction of the portfolio will actually get there.
Yes,
but if you go in with the expectation that this could potentially have the chance, right? Yeah.
And let's say, if I can add that, a very good point is that we have one of our member that is also one of your portfolio investment, that is Soldo. It is an amazing company in the credit card industry that is also working greatly.
Yeah.
Fantastic. Julie, thank you. Okay, we've got a couple of more questions coming in here. Davide, aside from going public, can you share with us what are your near and long-term plans for Talent Garden?
That's a
easy
question. I can stay here for hours, but I can say we had obviously last year some impact. Like somehow our vision was to really create a physical place for digital humankind. And somehow during the last years, we have to admit ourselves and somehow evolve on the idea that it's not only the physical part that can make Talent Garden create and empower tech talents, that is somehow our mission. And so we evolve a lot of our services. We move all our community activity online. We move all our education business online. And that shows us the potential of Talent Garden can be in the future, both physical and online. And I think this is also the big next step that we are working on. Really try to create the Talent Garden in the future, where it will be a blended experience online and offline to empower people in technology sector, empowering their growth, both for the people who are at the beginning of their career, coming to us to study in our courses, people who are already creating their own companies, living in our physical campus across Europe, create their own companies or working for the amazing companies that are based in Talent Garden, but also upskill and reskill themselves in the career progression of their life through our courses and our programs. And this is both for individuals, but also with all the corporations that we are helping to connect with our community and with all the skills that we're teaching. So somehow this mixed things in which we try to really be a bridge between the startups and in general the innovators with the big corporation.
Thanks, Davide. Super interesting, and definitely something I think is resonating with our community here in Dublin and the activities we have going on. We have some more questions coming in. I have a question here from Grant, who is one of our community members here in Dublin. We are interested in raising funding, majority for our marketplace backed by a finance partner. Is this something we could expect support for as a strategic plan, or do all roads lead to an IPO? I quite like the finishing of that sentence.
Got it. So is just if I get the question right, is that basically a strategic investor coming into the business and investing? I think that's it.
Backed by a finance partner.
Yeah, Grant, if that's right or wrong, then let me know. But that's the question. It depends on the investor. Surely bringing on a strategic investor is sometimes sort of a prelude to a potential acquisition at some point. On the other side, you have also strategic investors that don't, operate like that at all. I used to be at Salesforce Ventures, as you know, as we discussed in the beginning. And there, when we made an investment, that didn't necessarily mean at all, actually, that we would acquire the business. Rather, the opposite. It was really an investment arm. A lot of our businesses exited either by acquisition from someone else or by an IPO or some other form. Now, there are strategic investors that operate very differently, and for them, it is actually sort of an early indication that they want to acquire, right? So it just depends, again, going back to the point of do your homework, understand who that investor is, look into the portfolio and how it happened in the past, right? And if that's attractive or not to you. So yeah, that's the thing is.
Fantastic. And Julie, I have another question from you from Sam. Julie, you talked about the aha moment and storytelling in a pitch. So what tips can you share and what grabs your attention when you're reviewing a deck?
Yeah, I think it goes back to the point that Davide made around finding out where your business is in a journey and what actually matters right now, and then really bringing us to the front, right? If you're super early in a journey, likely the reason why an investor will invest is your team and sort of the overall market opportunity or the pain point that is there, right? If you don't have customers yet. So bringing that forward and show me why I should be speaking to you, because you're one of the most exciting founders I'll ever speak to, right? If you're a later stage business, bring sort of customer traction, customer advocacy forward, and actually showing, hey, we are growing really, really fast at great economics and our customers love us. That's going to grab my attention, right? In the very sort of, you see a lot of like late stage decks that have sort of a summary slide in the beginning showing the great metrics, and then the story starts in terms of this is what we do and this is why we do it. While early stage founders are often more, this is us and this is the opportunity we love, and then it goes up from there, right? So it really depends a little bit, and you need to find that sweet spot of what makes you special and bring that forward. And it's a little bit not one size fits all.
I suppose when you're if you're in an early stage company and you're looking to raise investment, you don't have the metrics. You can't necessarily prove it yet. So you have to have that really compelling story, that pain point, that problem that you're solving, and the ability to communicate it in a very clear and concise way.
Yeah, exactly.
Well, guys, I think if anyone has any other question, we might have time for one more, but if not, thank you, Davide, and thank you, Julie, so much. I really enjoyed this conversation. I might just wait another minute or two, and if nothing else comes in, we can close out the event for this afternoon. No. Just lots of love. Lots of lovely comments.
That's great.
Awesome. Okay, well, great. Thank you both so much. And I shall be talking to you 60 seconds. If I can ask you one more question. Anyone have anything to say about Ethereum related investments? Do we want to delve into crypto with 3 minutes left on the clock? I don't know.
Sure. It's a chat for itself.
Exactly. We might pick that up on another call at a later date, I think. It was a super interesting question. Okay, thank you so much, guys.
Thank you.
Great. Thank you so much for everyone who has joined. Before everyone goes, I'd love to run through some upcoming events that are happening in the Talent Garden ecosystem. So we have our next Tigers Explore, attracting and retaining talents in startups. It's open to everyone in our community and the public, so please do join along for that. For our community members, we have our next Tag Teach workshop, where our head of P&C, Lorena, our wonderful head of HR, will be talking to our members about how you build your company culture. And finally, we have our online courses through our innovation school. So for anyone who's attended here today, you'll be getting a follow-up email with links and information for all these different types of events we've got going on shortly. And we'll also be sending a link for a survey so we can get your feedback on the event today. Please take the 10-20 seconds to complete it. Great, thank you so much, and I hope everyone has a lovely evening. Bye.